Hello, this is Justin Roberti. Thank you for joining us today. I'm hosting a panel discussion for Chintai Singapore FinTech Festival 2021 Fireside Chat. We include, today on the panel includes David Packham, the co-founder of Chintai, Kevin Pang, CEO of Legatus Global, Raymond Poe, CEO of SDAX, and Ravi Bahadur Singh, who is a barrister. Thank you so much, everyone, for joining us today. We're going to have a discussion about compliant tokenization in Asia, opportunities that will shape the future of finance. So we have a lot of very knowledgeable people on the panel today, and I thank everyone for joining us. Hello, everyone.
Thank you.
Thank you, Justin.
Thank you, Justin.
Hi, Justin.
So it's great to have such a knowledgeable group of people together to be able to discuss this. Obviously, there have been a lot of changes in terms of regulatory frameworks, both globally, to some degree, maybe with the US leading that in some ways, in terms of mainstreaming over the past couple of years, and in Singapore specifically. So I think we were hoping to talk about a little bit about the APAC region as well. Why don't we go ahead and start out at the end of the order with Kevin. And Kevin, let's talk about regulatory issues specific to the APAC region or specific to Singapore. How would you describe the environment that we're dealing with in Singapore in terms of regulating crypto?
Right. So the good thing about Singapore is that, and that's probably covered up very much in the mainstream media, is that Singapore have two sets of regulations with regards to cryptocurrency or digital assets, right? Which is the well, looks to me like a political correct term to use for the media. So one of the regulations is the Payment Services Act. Essentially, it regulates everything that is considered as a digital token that doesn't have an asset back to it. So things like your Bitcoin, your Ethereum, and any of the meme coins out there, and potentially including DeFi tokens or GameFi tokens as well. So that's regulated under there purely for money laundering, kind of like monitoring of money laundering activities and prevention of that as well. Now, of course, the other regulations that is actually coming out of Singapore is actually this, and it is a very traditional regulations, just that they added on to regulate the activity for asset-backed tokens. So that's under the Securities Futures Act in Singapore to regulate things like security tokens and any other tokens that have asset back to it. So things that are defined as securities, right? So that's actually regulated under Securities Futures Act. So it's getting very transparent. Again, Singapore being an international player, right, in the financial services and being a financial hub, well, arguably in this part of the world, and also vying for one of the top spot for digital assets in the world, given that recently, I think lots of media covering that Singapore is going towards that direction, even though definitely the US is taking a lead, but Singapore works very closely. I mean, obviously being a politically a US ally, so we follow very closely with what's developing in the US, and some of the, I would say some of the developments in terms of regulations is pretty much what Singapore does as well. And of course, Singapore being following whatever guidelines and recommendations given out by the Financial Action Task Force, we actually developed based on that. So yes, that's the development. We have very clear, I would say, regulations with regards to cryptocurrency, digital assets versus any other countries in Asia Pac. In fact, we were one of the first to come up with very clear guidelines of how cryptocurrency will be viewed in regards to regulations.
Mm-hmm. And there's been some positive sentiment expressed recently. I believe there was an article we were talking about earlier where there were. Do you want to talk about that a little bit in terms of public sentiment expressed by the Singaporean government?
Sure. So a couple of days ago, the managing director of MAS, which is essentially Monetary Authority of Singapore, which is the financial regulators in Singapore, just said that very expressively that we will not kind of clamp down on cryptocurrency or anything that's related to digital asset tokens. In fact, it is a space to nurture, just that regulations is going to be enhanced to regulate this particular space. So no clamping down. Secondly, in terms of viewing it as a potential investment vehicle, especially for assets that are not backed, as in like tokens that are not backed by assets. What the view of MES is that expressed by MD Ravi Menon is that essentially it is about digital literacy, right? And educating the population to understand cryptocurrency and the risk associated with cryptocurrency and not clamping that down. A keyword that he mentioned is that, he can I mean, just like with the speculation in tulips back in the couple of centuries back. So he can't stop people from buying tulips, just that he can only express to people that, tulips are potentially a risky investment. So it's the same treatment for cryptocurrency. The only regulation is to really regulate in terms of fraud, in terms of money laundering, financial terrorism and all that. But for investment purposes, they're not going to clamp down. They're not going to really over-regulate. And then that stops Singapore becoming a crypto hub in the rest of the world.
So I'm going to take this over to Ravi. Ravi, would you concur that with something that Kevin had just said, which is essentially, is this a matter of awareness and education in many ways? Is this a matter of something where essentially the consumers, have to be given more information about these new class of digital assets so that they can trust them? Or this is something where perhaps the regulators are need to lead the way in terms of example. How do you feel about that?
I think it's both. I mean, I think education is part of it and a necessary part of it. But I don't think that regulation per se is a bad thing. The question is, how do you regulate it? I think the mistake happens when you try to regulate it in the analog world, following the traditional models of how we've regulated things so far. And I'll give you a case in point. We in Anguilla, where I'm a barrister in Anguilla, we enacted the Anguilla Utility Token Offering Act back in 2018, I believe. And at the time, utility tokens were just not regulated. You could do an ICO and nothing, no one, you did not answer to anyone. So we actually said, well, you know what, maybe some common sense regulation is fine, you can do it. First of all, we'll define what a utility token is. So we take out the grayness out of it. And we understand the nature of these, which were really relatively minor contributions for these tokens and really depended on the network effect of having a great number of people involved. But those people do deserve to have some information about what they're investing in. So that's a requirement, a mandated requirement under the Act. And you also have to put up a website and you have to track your progress and report to the commission how you're progressing with the funds you've just collected. I mean, it's not a full-length securities regulation, but it's a kind of a common sense regulation, which is actually nicely fits in with the blockchain space. So I think education, but also you have to come up with novel, innovative approaches, which addresses the particular thing you're regulating.
Where do you think they're doing it right now, Ravi? To just go ahead and hit you with a follow-up right away too. Yeah, where do you think they're doing it well?
I'm biased. I'm going to say Anguilla. Okay.
Well, that's okay. Tell me about that. I mean, it strikes me that like a lot of people look to the U.S., but the U.S. has a particular set of problems. I mean, it's been conservative about crypto really since the beginning. It's got loosened up a little bit, and also it's just in terms of moving in any direction. It's such a gigantic. It's a great number of people. It's a gigantic structure to try and make any sort of movement with. Is it easier in other nations to make more innovative changes that maybe could be world leading?
Well, I think the US and the EU they start from a faulty premise, which is to try and drag this into an existing framework. I think that's the fundamental flaw when you start doing that. SFF just released their latest guidances on travel rules and unhosted wallets and stuff like that. And it doesn't make a lot of sense. And in all fairness to them, they recognize the difficulty they will have by trying to drag this into the traditional frameworks. I think we need to stop doing that. I mean, saying this for since 2016, we need to stop trying to do that and look at this as a completely different creature and try to regulate it according to its own norms and effectiveness and features. The US is not doing that. EU is certainly not doing it. And maybe countries like Singapore can actually start to come up with most innovative approaches, implement it, and then let the world see, well, you know what, there is an actual different way of doing this.
Sure, absolutely. Raymond, I believe that you're operating in Singapore now, are you not? You're based in Singapore?
Based in Singapore, yes.
So how would you describe, certainly from being an on the ground kind of perspective, how would you describe the level of acceptance of crypto over the past 2 years? it seems like there's been a surprisingly strong drive toward mainstreaming globally since the pandemic. I mean, I have no study to align those two things, but there seems to be a correlation. The timing certainly matches up. Has the same sentiment, at least from the retail buyer, or started to emerge in Singapore, where people are kind of looking for something outside of mainstream or traditional finance?
I would say, well, I always think about things with the diffusion of innovations curve, right? The innovators, when Bitcoin and all the different cryptocurrencies came out, 6-7 years ago, there were this 2.5% of the innovators that were very quickly jumping on board and buying into it and just loved the idea. I think over the last 2 to 3 years, the early adopters have started coming on board. The latest data, based on something I read recently, is that Singapore has about 16% of the population, population as of the investing population, is kind of dabbling in crypto. The question is, how much are they dabbling in? We don't know. I know of a lot of friends that went in with $1,000, $2,000 just to give it a try, to get the experience and understand where it goes. I think the adoption is still a way to go. And the real reason behind it, in my mind, is that the basic premise of asset is still being questioned. What is crypto versus, is it really a asset class by itself? There's so much media talk about it being a inflation hedge, so on and so forth. So all those are still kind of up in the air. Nobody can really drive to a conclusion exactly what it is. So from a digitization perspective, I think the traction is slowly building in Singapore, especially. MAS has been issuing several licenses, what we call recognized market operator licenses, which basically operate digital assets, right? These are not crypto. These are real hard physical assets, as the MD for MAS mentioned, Ravi Menon mentioned, right? He made a very interesting comment actually the other day in the news when he did the article. He said tokenization can be more powerful than securitization. I mean, coming from the financial world in the past, securitization is a big deal. We do a lot of trades on a daily basis on securitization. So if this is going to be bigger than that this explosion, it will come, right? It's just a matter of time. And to Ravi's point, a fair bit of education has to be in place to let people understand what is this about. The biggest thing, because of the media news, everybody thinks of digital assets as only crypto. Right. This education has to happen and kind of bring people to understand that tokenization can be for anything under the sun, not necessarily just crypto. And the opportunities that it provides to any individual out there is just humongous, it's massive.
So tokenization is more powerful than making a security. Is that because it creates the opportunity for like fractional sales, or it creates different ways to package financial or create new financial instruments by combining them and packaging them in different ways and so forth? Or what is the thinking behind that? I mean, tokenization obviously very powerful, but what makes it more powerful than securitization?
Well, fractionalization definitely is an area or a point that tokenization will bring about. I'll just give a simple example. Back in the 90s, when I started working and when I first made my $200,000 in my bank account, right, in the 90s, and back then a bank came to me and said, hey, you meet a certain tier. Now you can invest in anything outside of just the retail assets that's available to you. However, right, they told me, with $200,000, you can only invest in one asset. That's because of the regulations around accredited investors to make sure that you understand and protect the risk of the investors, right? If tokenization is available back then, my $200,000 would be probably placed in 10 different assets instead of one single asset. And of course, this was back in 97 when there was a financial crisis in Asia. Treasuries was trading at 6-7%. Yeah, they dumped everything into treasury. And yeah, it's just the limitation of single asset with the current regulation to protect investors kind of limits our ability to look at all the possibilities. I mean, we can easily put 20,000 in crypto and the other $180,000 somewhere else. So fractionalization is something, and I feel that there are also asset classes that were not available to an individual, right?
Mhm.
You can't buy a massive house in Singapore, for example. It costs between $10 to $30 million. You can
Mhm.
fractionalize that now, and you can take a little stake in it, and if it goes up in price, you can get multi-baggers, right? So there's an opportunity, I think, is massive for the market today, and yeah, to make it a lot more efficient too and cheaper.
Mhm. So to extend kind of the same idea and carry it over to you, David, because I know this is something that you've spoken a lot about before. The idea that capital markets, that new investing opportunities are being open to retail investors that hitherto were not available to them. This new class of digital assets. How do you see that playing out in Singapore specifically, and how do you see that playing out globally? Like what is, in terms of new opportunities we can really wrap our minds around in terms of investors, as investors, where would you say the exciting opportunities are short term?
So the first part of your question, how is this going to play out potentially in Singapore? I think if you observe where Singapore's positioning itself right now, what it seems to be doing is trying to position itself as amongst the very highest quality global jurisdictions, but at the same time still embracing innovation to a high degree in the digital asset space. So, for example, it's not like in Estonia, for example, which was obviously trying to establish itself in that area. It's very much more on a parallel with something like New York or London in terms of how it's viewed. So as a result of that, though, what they are also doing is maintaining the highest standards with regards to certain controls at this stage. So I think it will be wrong to look at Singapore and assume that it's going to have the absolute most bleeding, cutting edge related free reign and controls at this stage. They are, however, very receptive to innovation, is my take on it. And they go for a particularly light touch on types of digital assets that are not necessarily securities. Maybe they fall into more of a gray area where they maybe have more commodity-like properties and so on. So I think Singapore's generally positioning itself exceptionally well in that regard. I think it's one of the top 3 locations globally in terms of providing a cohesive framework and just generally a series of opportunities for firms to innovate, but at the same time really evidence to the rest of the world that this can be done, and it can be operated with regulatory oversight without stifling innovation. So for me, if you look at then what that translates into, I think we won't really see some of these really interesting innovations necessarily hitting the retail level, maybe for a couple of years yet, because I think everybody generally needs to be comfortable that we're at a point where accredited and that type of level are being properly serviced, and then we can work with the regulator to sort of get to that point potentially. And really, the same goes globally in the sense that that type of leadership, Ravi and Anguilla with the utility token framework is another example of this, that these types of jurisdictions that are actually leading and defining out a whole utility token framework enables companies to actually leverage those and evidence that globally, which helps get other regulators who maybe have a more conservative outlook or just feel more defensive related to what this type of thing means. I think it will just generally help the whole global regulatory framework mature and reach a point where we reach a general consensus on that. So to your other point, which I think was more around the kind of types of innovations that are actually possible with this. I mean, as Raymond was really saying, related to sort of tokenization versus securitization, what also really is fundamental in this generally is that it has the potential to be vastly cheaper to actually tokenize than anything that's been seen before. This becomes technology that becomes accessible to a vastly wider group of people. And then when you look at what that means in practice, it translates to aspects like issuance, like the ability to deploy a secondary market for that, to enforce things like compliance as well. And we're certainly seeing that with the types of entrepreneurs who we're talking to. I mean, they've come to us already with a wide range of use cases, including things like tokenization of carbon, for example, being sequestered. Agricultural land is another. Real estate is obviously a big one that fits into that, solving the liquidity issue of that asset class. And the list really just goes on and on. Different types of commodities related to. So I'll give you another example of where innovation has hit the gold market. Is people are talking now about merely tokenizing proven gold reserves still in the mine itself, rather than bothering to mine it anymore. Right. And I mean, this shows you generally what's possible, and that's aside from then businesses actually innovating and saying, well, now this is programmatic too, so we can actually embed other properties into these tokens and instruments in a more sophisticated way.
That's great. Kevin, I know that you're working with NFT projects as well. If Singapore is still at the point where we're kind of driving acceptance of tokenization itself, acceptance of crypto itself, are we? I mean, NFTs right now are sort of the darling, certainly of the crypto press, if nothing else, worldwide. But also, look at social media. People are very, very excited about them. I think it would be fair to say. I think they're discussed more on Twitter than any other single thing. At least that's what I find on a daily basis. Well, what will it take to bring that same kind of enthusiasm, to Singapore, to the APAC region?
Right. So at least from the Singapore perspective, right? Even before the news from MAS from Ravi Menon about the looking into crypto, and that we are trying to take a very light touch and a very innovative approach to crypto, the government has been very encouraging with NFTs. It's starting all the way from March, right? So when I say encouraging, this is when the mainstream media actually covers NFT extensively since March 2021 this year. Now, I mean, incidentally, when we are speaking it, there's an article today, a full page article, and this is not the first, neither will be the last, on NFTs, right? Coverage in Singapore, the popularity of NFTs, the new development in NFTs and all that, full page, right? So that speaks volumes coming up from the mainstream media, which means that the government is really looking to that, really encouraging to that as well. Now, I think following that, in terms of the government's treatment of that, recently there was a charity event run by the Blockchain Association of Singapore, which I'm actually part of, running on my powered by my platform, my NFT marketplace platform, to help raise funds for NTUC, one of the government-linked agencies, one of the funds that actually helps to support displaced workers and their families. Now, that was actually being mentioned in the news, and the Prime Minister's wife actually mentioned that in her Facebook for this particular event, and the ministers that was actually mentioning that as well as part of the NTUC. And the contributor in this particular charity event is none other than the Speaker of Parliament, who contributed some photographs to be minted into NFTs. Raised quite a fair sum of money, way above the amount that we wanted to raise, and then that was pretty successful, right? So that is the first use case in the world run a charity event that's actually endorsed by a government, right, for NFTs to raise funds. So I think that is a very big view, and that is a big indicator of where the government in Singapore with regards to NFTs. Now, of course, that's for digital media and things like that, but I'm actually going to the area of, like, as mentioned previously, about fractionalization of like property, real estate, even physical items, right? So this is an area that's still pretty gray in terms of, does it constitute as a security? Because in the US, I think that's still pretty much for debate and argument, whether fractionalized NFTs with regards to physical items like real estates and assets, does it constitute as a security fully, or it is not, right? Even for digital art, does it constitute as a security? So I think the argument or debate will continue to go on. Even if you look at the document that came out of SFF recently, the treatment of NFTs is probably just one section. So I think there's still a lot of room to actually look into this area to get clarity, because right now it is still something open for debate. But definitely lots of companies and lots of projects are going towards that direction of using NFT as a fractionalization of real estate as well as physical assets, for the availability to the public to be able to invest into, or at least purchase into. Yeah.
Brilliant. So Ravi, you said something earlier which I found interesting. The idea that the U.S. and UK and the EU have been applying, essentially, if I understood you correctly, the sensibilities of existing structures onto a totally new class of digital assets. do we, cases like, maybe I'm reaching too much here, but even when I look at cases like El Salvador and their adoption of Bitcoin as national currency, for example, I mean, it goes to show what can be done. That that innovation is not necessarily the exclusive province of certain large economies. So, like, what do you think is here in terms of a near-term possibility to look at it, not necessarily through the rubric of what's been done before, but of what is possible, when approached properly? What would be the proper way to look at it versus through the lens of traditional assets?
Well, I mean, I think that's exactly the answer. Don't look at it through the lens of traditional assets and traditional frameworks, because as we know, traditional frameworks haven't been spotless. World Economic Forum
I guess that's fair to say. Yeah.
They have written a paper, and they themselves recognize the difficulties that the SFF guidances have been causing, leading to a massive number of unbanked people. I'm from the Caribbean myself, and I know that the corresponding banking situation has been dire for the last 10 years. It is incredibly difficult for Caribbean Bank, which, by the way, has the highest AML standards in the world compared to the US or even the UK. Wow. But yet we have problems getting corresponding banking. Now, so these traditional solutions have massive problems. My general belief is that they're unsustainable, certainly on a global level. So that's the impetus to let's start looking for new solutions. Well, here we go. We have a new medium of value. Maybe we should start looking there and with new solutions for that particular medium. So basically, I'm not saying throw the rule book out, but start fresh. First question, does the traditional framework suit this best? If not, can we think of a new framework? If we are thinking of a new framework, shall we take into consideration what it is we're working at? For example, in the blockchain, I mean, you can track wallets all the way back. You can track crypto all the way back through the wallets, right? You can't do that necessarily in traditional finance unless you have a regulatory framework. So we can already do it technologically. Why would we need to adopt something from the traditional framework to bring into that? So those are the kind of new innovations that we really should be looking at with fresh eyes.
Do you think that it's suffering from being overregulated? I mean, certainly that was the hue and cry 5 years ago. I would have said that was even the general sensibility of most projects that I talked to 5 years ago. People seem to have come around a little bit, but are we in danger of overregulating?
Well, I mean, I'm not so sure people have come around. I think they're facing that same question: is do we have a choice? And right. You keep coming up. I mean, SFF is this massive organization that seems to affect the entire world, and yet you can't really pinpoint who exactly they are, right? So I think people are actually just taking that position. Well, this is the way it is. Now, that's a really bad position to take, in my view, for an innovative field like blockchain. I think it kind of defeats the entire purpose of what the experiment was run for. Right. And I think, you need a few more mavericks. And in the regulated space, ironically, saying, maybe this isn't the best approach. Stop trying to bring this into the traditional frameworks. You're going to have problems. It's not going to work. And you're going to stifle the hell out of this new innovation. Had you done this, for example, in the internet back, 30 something years ago, we wouldn't be where we are. And thank God we are with COVID last year. If we didn't have the internet in its current iteration, what would have happened, right? So people are being very short-sighted just because there's a value attached to this. And that's such an amorphous term. I mean, everything has value, really.
Right.
But as I think, one of the earlier speakers said, it's this whole thing of conflating blockchain with cryptocurrency. It's not just that. That's a small part. And as David recently just mentioned, one of the projects we're working on with Chintai is a carbon sequestration tokenization system, right, which is actually really well suited for it. And now that would open up a market that has been reduced to just a few people in the know, charging enormous brokerage fees to access that market, to literally mom and pop in the coffee shop who wants to say, what, I want to do something good. I want to set off my carbon footprint. How can I do this? Well, tokenization is your answer. You can now go and get that and set off your footprint. I mean, the benefits are massive, and it's not just cryptocurrency. It's just so many things.
I think it's really important that you brought up the unbanked and the underbanked in the world, of which there are something like 2.3 billion. I mean, it's a massive number of people all over the world, including in the US. It's a problem. It's a problem everywhere. And I have noticed that I've seen a lot of white papers that talk about addressing that from a very high level point of view, and very few projects that seem centered around addressing that. So I hope that it's something that it's certainly I hope that the democratization of access does happen. That's been talked about for the past 11 years, and even in the Bitcoin white paper, which just passed its 12th anniversary on October 31st. Raymond, in terms of democratization of access, to take it back to Singapore, do you see that? Do you see it blockchain in general, tokenization, bringing greater access and greater opportunities to be able to make different kinds of investments? I guess if it's too early to talk about the retail investor, if that's a couple of years away, maybe shorter term, maybe for traditional finance, how are they getting on board?
I would put it this way. Actually in Asia, what we're seeing, especially in the ASEAN countries, the Southeast Asian countries, is that tokenization has actually taken bigger leaps and bounds than the more developed countries like Singapore and Hong Kong, right?
Mm-hmm.
And other than the ASEAN countries, Korea is being the other country that has taken on to tokenization in a big way. So I feel that because you're able to fractionalize it, the folks are able to come in with smaller amounts, that you bring in a lot more people, right? The unbanked, I think that would be a separate use case, separate agenda that needs to be addressed, because tokenization is for investing of certain assets or buying of certain assets. For the unbanked, that would be the last thing on their mind at this point in time, right? But if I look at the tokenization agenda in the region, is making good traction. Vietnam alone, the numbers was that almost a significant, I think if I'm not wrong, it was 60% of their population have dabbled into some sort of digital assets of some kind, right? Whether it's NFTs or crypto. So I feel that it's the developed markets that tend to be lagging behind when we talk about digital assets, simply because there is this mindset as of what an asset means versus the other countries where all of a sudden there's all these opportunities to invest in different things which they've never seen before, right? Just as what we've seen with digitization. Forget about digital assets, but look at this digitization. China, when they started coming on board, 30 years ago, television wasn't a big thing. They went straight into flat panel, none of the old chunky televisions that we know. And look at iPhones, the way that they use money, digital currency, and so on and so forth. It has moved on. So to me, I think tokenization for the developed markets where the money is going to take a bit more time to develop. But the smaller countries, the smaller economies, it's just going to skyrocket like what China did with in the last 30 years.
Mm-hmm. So David, where do you think the near term opportunities are? Let's address Singapore first, and then we can talk kind of globally. Where do you think we're likely to gain the most traction, if not from the retail perspective, then find from traditional finance, maybe dipping its toe into a blockchain and tokenization?
So I think it's the Monetary Authority of Singapore have really started to roll out a number of CMS, this is capital market licenses, and RMO, recognized market operator licenses, in hand with the payment services ones. And they've started issuing those out now to the first digital asset companies. And what that practically means is we're starting to see the early growth of an ecosystem of companies coming in who actually have licensing to carry out a variety of tokenization activities with the full oversight of MAS. Now they've got a regulatory framework to operate within, and to Ravi's point about whether regulations can be overkill and potentially stifle innovation, I think this is where we'll see jurisdictions starting to actually compete to some extent in terms of what they're providing for a range of different offerings, and companies will assess what works best for them in terms of where they maybe seek to locate. But particularly for Singapore, I think it's well placed therefore that what we're going to actually see our first meaningful commercial issuance is really kicking off really from around about now, but particularly starting to accelerate up in 2022 and 2023. We're going to see that across a range of asset classes. You know, a lot of people go on about tokenization of securities, but if you look at a security inherently, it is already quite liquid and easily tradable and so on. So there are actually greater potentials coming from other types of asset classes generally, but there's a lot of demand nonetheless for things like securities too. So I think really what we're going to see over the next 18 months is an acceleration of that early ecosystem of licensed firms coming out. And from that, we'll see the bigger players then starting to do more than experiment, which is what they're doing right now. So we'll see this move from the proof of concept stage, as it were, into real commercial traction. And I think the early signs are good. You know, wherever we're seeing digital assets being issued in some form, the demand is very, very high, disproportionately more than you might expect, because a lot of investors are very hungry to get involved in these types of areas. And so it bodes well, I think, generally for that growth that we should see.
So over the next couple of years, let's just go up and down, we'll go up and down the line a couple of times. What would you expect, you know, real estate, what should people be looking at in terms of actual asset classes that will become more available for trading through tokenization?
Well, I think 100% real estate's been the core driver for us. If you'd asked me probably 2 years ago, ironically, we thought our top asset class would probably be NFTs, ironically, but then we've seen that grow out in a totally different way than we had originally anticipated. So real estate is definitely a big one. I think there is a lot of potential in the bond market. Generally, it's actually a bigger market than really all the rest combined. So there is real potential there for example, companies to be able to issue out types of bonds as an alternative to having to issue out equity. It's something we've been definitely looking into for quite some time, and it's still on our roadmap to actually to develop out as well. But then really, for me, actually, what I'm seeing beyond that are the innovators. They're leading with a raft of different types of digital assets that I hadn't necessarily even considered. They come along with a really fantastic idea, of which, you know, the carbon one is a great example of this. Right. And they come along, they've been spending time developing this out, and now they realize that what they most need apart from that is blockchain and all the efficiencies you get from tokenization to complete that model and realize its full potential. So I think we're going to see a lot of that as well, some of which will need to be regulated for sure, and some is going to be in the kind of gray areas where we're not really sure if it is or not. And this goes back to I think the point made before elsewhere, which is generally trying to regulate digital assets is this very wide group of within the existing framework is going to be challenging, because you're going to get new asset classes in some senses as well, and it's going to be very challenging to not stifle innovation and accept that and work out where is the appropriate line to do that. And that's really where then it feeds into the global perspective, because you do see a lot of jurisdictions outside of the major ones who are hungry for business. You know, if you look at the certain offshore entities, for example, that have made a good living for a long time off offshore banking, that's largely an industry everyone accepts is going. They're hungry as hell now for the digital asset space and to provide a welcoming environment for that to allow it to flourish. And so I think, you know, we'll see a lot of innovative projects deciding that is the natural place for us for now, and maybe then we'll dual list or we'll operate in these other jurisdictions later.
I'm gonna take it back to you, Raymond. You know, because I can tell that we have a smart group on our panel discussion today, because it's because everyone's very circumspect in terms of making any prognostications, which is pretty. Nobody wants to necessarily make flat out predictions, in other words. But what are you excited about, Raymond? What do you think, if you had to voice an opinion around it, what would you be excited about as being kind of like the next step or the next big thing that you expect to break, particular to the Singapore market?
Difficult question, Justin. And the reason for that is because as I was kind of mentioning earlier, it's just a matter of education of the people in terms of their appetite for risk, right? MAS has a very strong, they have 4 pillars and what they call 4 principles of supervision. They look at the risk focus, stakeholder reliant, disclosure based, and supportive of enterprise. That's their 4 pillars that they work on. And based on these 4 pillars, they will look at how do they manage the risk for the investors within Singapore and also of the financial system. So as you look at that, and to Ravi's point earlier, is that we shouldn't be dragged into the old traditional way. But I'm of the view that it's going to be hybridized, at least initially, because the regulators are there. They still need to kind of manage this exposure that's out there and allow people to get up to speed as what the risks are, right? And as the people get up to speed to what the risks are and able to do risk assessment on, of the different tiers of risk, then it's a lot easier for them to open up the system a lot more to different ideas. So I feel that it's going to be a hybridized model before we have something really big and explosive. But to me, back to your question is, what is going to be the big thrust in this? I would say that, well, right now there are so much going on in the world with regards to what David has said, different asset classes that we don't even know exist today. Right. All of a sudden, the people in Asia is going to be able to get access to some of them, right? I can't really tell you. I mean, just a very simple example is you have a lot of people that's drinking whiskey, right? And they want to invest in whiskey because they know there's limited supply, there's massive demand, China is coming online. Where is this going to go? So if you look at it, as simple as whiskey that everybody knows from a day-to-day perspective, but investing in it seems to be something totally new. So we will start with something traditional, something that people like, whether it's hobby, interest, whatever it may be, that will kind of help us lead to the next generation. I don't know. I don't foresee the next Bitcoin at this point in time, right? Maybe the next thing. I was talking to my chairman about this. He was telling me, Raymond, watch out for quantum computing, right? That might change the entire game that we're looking at in terms of blockchain and whatever else. So yeah, way far off for me to even think about it.
There's nothing like making predictions around technology that it isn't technically functional yet, right? We don't know what it'll do. But maybe the AI will just take over at that point, and we'll have an entirely different discussion. What do you think, Ravi? What's near on the horizon? Something that we can be excited about? In Singapore and APAC, globally.
I think the most exciting thing is innovation, and I don't say it flippantly because, as it stands, without the slew of regulation, crushing everything under its heels, you're accessing amazing people from all parts of the world. You can pay a kid in Kenya using Bitcoin, which allows him to contribute towards the project. I mean, I've seen this played out so many times over the last couple of years. Where it will continue to play out, I don't know. If the regulations become too difficult, if it becomes insurmountable to that persons in Kenya, then you're back to square one with the unbanked, right? If you can't give them value for their money, how can you access their professionalism? So I think as of now, we're getting, incredible projects that literally you would not have thought about, a year ago. So I don't know that it is a class as such, an asset class as such, as rather that applications of the blockchain on almost every part of our life. I think that's where it's going to.
The mainstreaming, the technology itself. Sure, great answer. Kevin, what do you think? You seem you have a couple of things you seem pretty excited about right now. Of course, you were talking about NFTs and generating money for charity as well. What kind of gets you hyped right now in terms of the possibilities near term?
Sure. So I'm actually looking into an area which I think I actually had a discussion before with David in a call actually. So the area I'm actually looking into is actually the bridge between traditional finance as well as like decentralized finance as well. So I think that actually even goes into the area of like securitized digital assets, like the area that actually Raymond is in, David is in as well. Bridging that with a complex financial mechanism, that consists of both traditional and non-traditional like blockchain. in to the area of DeFi, because DeFi, as you know, is like, you know, decentralized finance is purely in a very new space. Well, I mean, arguably not regulated in a very gray area, and looking to assets that are not exactly backed, right? But the thing is that I find that I'm actually working towards a model where decentralized finance, which is available to anyone around the world, that can then now have access to investment into things like security tokens or digital assets, right, backed by securities. So how does that going to work? Something I'm actually working on right now. So if that works, then obviously it's going to be the first where, you know, you actually bridge traditional regulated asset-backed security finance with decentralized finance. That's one area. Second area that's actually keeping me up at night as well is actually synthetic trading, something of the sorts that, you know, Binance tried to do but failed because of regulations, something the FTX tried to do, but, you know, obviously it's actually limited by capital controls and all that. So I'm actually looking at it in a very, very different way, and something that we are actually developing right now. Once the design is finished, we're going to patent it, and then we are actually putting it into various sandboxes around the world, starting from Singapore. So it's going to change the very dynamics of what we define as traditional finance being utilized by blockchain, but, you know, going to the areas of decentralized finance as well. So yeah, these are the things that keep me excited, because I think no one is exactly looking to that, not in the form that it does. So yeah, that's the thing that I think will probably be potentially developed in this space, about bridging traditional finance with decentralized finance with the power of blockchain. Yeah.
So, you know, Ravi, you had mentioned, you know, the innovation, and of course, it's been a globally sourced effort. Everyone, you know, using blockchain to create new solutions that improve finance and improve life overall. What is it going to take? You know, since no matter where, like I've seen very few geographically specific blockchain concerns. Usually people are looking to be, you know, global concerns in one way or another, at least ultimately. So what's it going to take in terms of to create a regulatory framework that we can live with on a global basis? I mean, ultimately that's what has to happen, right? If it has to be, or if you have to hit different benchmarks or different parameters for each sovereign nation you're working in, it becomes quite complicated quite quickly. What is the panacea for that? It seems like such an intractable problem right now.
Well, I see, and there you go, and that's the problem with traditional frameworks, right? Traditional frameworks are very geographically isolated, and you're going to have the problem. You could not, I don't think there's any project that be compliant in all 218 countries in the world. It's not possible. And we need to step away from thinking of it in those ways, and, you know, let it have the growth that it needs to do to penetrate and access these places. The problem is, if you start regulating, you see more the concerns than the benefits. Your risk reward analysis is off. You know, again, I throw it back to the internet. You know, if we did the risk and reward analysis there, we decided to let it go, right? Great things happened. For some reason, because the word value is attached to this, everyone's to be very, very, very scared. I mean, first of all, you have a natural screening effort happening, because people accessing crypto have some degree of knowledge of computers and the internet and stuff. That's just naturally how it works. So you have that safeguard already in place. Maybe slow it down a little bit, the regulation side, let the reward side take off a little bit more. And then we can see, well, look, what are the unique problems that blockchain brings? How can we address them? That's the progression that it should follow, as opposed to, here's something new, let's regulate it, and then we'll consider what rewards we may have given up by rewarding. And one of the rewards is global accessibility. It's a fantastic thing to link the world, because we live in a global world.
That's great. That's an excellent point. You know, Raymond, in terms of creating a single structure, having, you know, maybe standards of regulatory structure that would start to assist us in being able to port businesses between jurisdictions, between sovereign nations. You know, how do you see that shaping up? Well, particularly starting in Singapore, is there an opportunity for you know, powerhouse kind of economies like Singapore's to be able to maybe lead the way, maybe be further ahead of the U.S. or the or EU if they make the right decisions at this point?
I think Ravi mentioned this earlier. Using the traditional framework to accomplish what you just pointed out is going to be fairly challenging, right?
Yeah.
So unless there's a new way of thinking about how we ought to do this, I somehow find the ability to port businesses across different jurisdictions going to be fairly challenging. Yeah. Simply, I mean, as it is, just crypto alone, just look at the diverse reaction from every single country. China shutting it down totally, Singapore maintaining a fairly open position with regards to it. I think this is going to be, is going to be a massive challenge. I don't know. I'm going to defer to the rest of the panel view on this. I don't have a straight answer for this.
What about you, David? I know that managing compliant tokenization, that's what Chintai's platform is doing or seeks to do. Now that you're getting into the scope of global compliance, how would you summarize that picture? How is Chintai handling it right now?
It's really easy. Yeah.
That's really easy. I was hoping it was simple. That's good news.
Yeah. No, but very, very clean and quick and simple to do. The fact we're all laughing just says it all, really, isn't it? Right. It is a very complex area, and it's something of a minefield for companies that are trying to do this without guidance. To try and, for example, look at any given jurisdiction and understand the sheer breadth of rules and complexities and nuances that may be in place for a given asset class, particularly if what they're trying to do bridges multiple asset classes, is very challenging. So I do think that just in the same way as we're seeing innovation from the DeFi space and elsewhere in digital assets on a range of levels, things like tokenization, we're seeing that same level of potential coming from this same technology to affect areas like regulatory compliance, transaction monitoring as well. So examples of this, if you look just at what we're building, for example, it's effectively a very customizable on-chain rules engine that can auto-enforce whatever rules we plug into it across the trade life cycle. And so in practical terms, what that means is that however bad a set of and restrictive a set of rules a jurisdiction may want to put in place, we can implement those to be compliant in that jurisdiction. What's actually going to happen as a consequence, of course, is that fewer and fewer people are going to choose to issue in such a jurisdiction until they kill off their local market in that scenario. So I think it's less about over time. These types of solutions, I think, are being built around the world, and so digital asset solutions will be able to be compliant with really almost any rules that come in place. It's just going to end up, as with any of these types of things, it's going to end up hurting the local jurisdiction eventually, in that they'll miss out on the underlying potential of this. But yeah, it is very, very challenging generally, and I think if you look at it from an innovation perspective beyond this, I see where there's opportunities to win over regulators are things like transaction monitoring. So when you start to embed in the likes of AI into this, you can make things like transaction monitoring vastly more sophisticated. And when you merge that with a blockchain, which enables obviously everybody to see the underlying transactions across the trade life cycle, you really have the potential not just to sort of retroactively implement a series of very crude rules, but to implement increasingly sophisticated monitoring that actually picks up things in a proactive way. So that really has the potential over time to actually vastly reduce the potential for things like money laundering until we actually get to a point where we're able to evidence to regulators that, if things operate in digital assets on chains with these types of solutions, they're actually far more secure than the global banking system, which, as we all know, is actually the premier money launderer globally. I used to work for the world's biggest money launderer. I won't mention which bank it was, but so ultimately, I know we hear a lot of negativity around crypto in general and this, et cetera, but really we have to remember that the top global money laundering currency is the US dollar.
Yeah, I was about to say that they'd have to try pretty hard to compete with what USD is used for.
Yeah.
Well, thank you so much, everyone, for your time. I know that we have kind of a hard stop coming up. Thank you for joining us on the panel's discussion today, David, Raymond, Ravi, Kevin. It's been great speaking with you all. Thank you for entertaining our questions, and we'll go ahead and wrap up compliant tokenization in Asia. And thank you all very much for your time. It was good seeing you today.